Good afternoon, everyone. Welcome to the Crawford and Company Masterclass. Thank you for taking the time to meet with us today. I know this is on some people's lunch hours, so we appreciate you taking the time. A quick note before we begin, this session is being recorded. We will be posting the full recording on our YouTube channel, and we will also send it out to everyone who's registered, but we're not able to attend the live session. If you do run into any technical issues during the webinar, please try to refresh your browser first. If the problem continues, let us know in the chat, and our team will help you out. We're also going to make some time for Q&A towards the end of the session. You can submit your questions at any point using the Q&A feature, and I'll be keeping an eye on them throughout. If we run out of time and don't get to your questions, we will follow up afterwards to cover any answers and additional questions. And if there are no questions at the end, we will give everybody back a few minutes for their lunch hour. I'm William Slade, Vice President of National Property Solutions and Contractor Connection here at Crawford & Company, and your moderator for today's master class on catastrophe response in claims handling. Today we'll be discussing the importance of ensuring that organizations have a current catastrophe plan and some of the important aspects of a CAT plan that should be considered and reevaluated on a regular cadence. For today's presentation, I'm pleased to introduce Ed Ivey. He is our Crawford Catastrophe and Property Claims Leader. Ed has deep experience supporting major loss and catastrophe claims handling across roles spanning field adjusting, process leadership, frontline people management. Ed has guided teams through complex coverage and technical issues, strengthened file handling practices, and built practical tools, training, and workflows that improve consistency and outcomes. Known for combining disciplined operational oversight with a strong coaching mindset, he partners effectively with stakeholders, evaluates customer experience, and helps claims professionals perform at their best. Ed, I'll pass it off to you.
Wow. Thank you so much for that introduction, Billy. I think I'm going to get you to rewrite my resume so that I can pass that along and have something positive to say about myself that I couldn't do it. So thank you all for joining. Again, today you are with us because you'd like to learn a little bit about catastrophe planning and preparedness. Specifically, we want to touch on, reactive to proactive execution. And we want to start with really why CAT preparedness matters. So listen, CAT events are no longer rare or isolated. Frequency, severity, and geographic spread continue to increase. 2024 was a record-breaking year for Canada CAT, costing over $9 billion. And with inflation, supply chain, and tariffs, costs are anticipated to continue trending upward. So although 2025 was not that record-breaking year of 2024, IBC still states that the average number of CAT claims have nearly doubled over the past decade. And while 2025 costs were far below 2024, they still ranked in the top 10 costliest years on record for severe weather-related insured losses. So let's dig a little deeper into 2025. Some of you may experience this, some of you may not have. We want to start at the beginning of the year with some industry loss estimates for CAT events that occurred as provided by CAT IQ. So February, we had an Eastern Canada winter storm that affected Ontario, Quebec, New Brunswick, Nova Scotia, and Newfoundland. Industry loss estimates at $130 million. Late February melt that occurred in Ontario and Quebec at $179.3 million. Most of us are aware, if we worked for a carrier, of the March ice storm that affected Ontario and Quebec. Industry estimates at $452.2 million, and that storm was quickly followed by an April Colorado low in Ontario around April 1st through 3rd that brought heavy wind, wintry mix, and flood to the GTA, Kitchener-Waterloo, and South Central Ontario, adding an additional $154.7 million. During the late spring and summer, Canada experienced some wildfires. We had the Lac Duvernay wildfire in Manitoba at $60.5 million. We had the Flin Flon wildfire in Saskatchewan and Manitoba at $255.8 million. We had the Calgary hailstorm, Calgary by itself at 141 million. Montreal and southern Quebec's flash flooding at 115 million. The severe hail, wind, and rainstorms in Alberta, Saskatchewan, Manitoba at 248 million. And lastly, most of us remember the Weather Network talking about December BC atmospheric river series with a reported maximum rainfall of 190 millimeters and maximum gust winds of 131 kilometers per hour, estimated at 72 million. So listen, we know that event mix matters. 2025 combined ice storms, wildfire, hail, and flood. And each one of those has distinct severity drivers, coverage, and adjusting complexities. So can we control the weather? I mean, I can't control the weather. I'm certain that you can't control the weather either. But the question we should ask ourselves is, what can we control? And we can control our response plan to weather events. At Crawford, we believe the difference between a successful CAT plan and a strained one is rarely that effort during the event, but almost always the planning done before the event. We have found in working with carriers that CAT events expose several organizational weaknesses. We're going to talk about those organizational weaknesses one by one and then get into some detail about them. But some of the organizational weaknesses that we see are capacity planning, loss exposure, response time, settlement strategy, communication alignment, and supply chain awareness. As we go through these weaknesses, I would like you to ask yourself some questions in consideration of them. I'll start with getting to generate those questions. So let's look at capacity planning. You should be asking yourself, do we know our capacity? And if so, what is it and how is it measured? Is that capacity planning measured by file pending? Is it measured by service standards? Or is it measured by our available staff? Second, how big is your claims team? Is that current claims team below, at, or above your ideal capacity? What mobilization procedures are in place for a sudden, considerable surge in claims? Do we have sufficient staff expertise to match our policy mix? What do you mean by that question, Ed? I'm not really sure what you're talking about, sufficient staff expertise. Well, let me give you an example here because it relates to your capacity, the size of your claims team, and your mobilization procedures. Based on the event and the geographic location, what type of policies do you expect to be impacted? Are those, or is the potential affected commercial or personal lines rich? And based on where those policies are geographically located and the mix, whether it's commercial or personal, do you have a limited specialized staff serving those policies? Or is your team multi-line qualified? Expanding on that, are you using your property claims team alone to handle the CAT, or will you be asking casualty, accident benefits, bodily injury, SIU, auto adjusters, and or your supervisor and management team to assist with claim handling? If that capacity is measured by service standards, what is your ideal claim pending per adjuster so that you can maintain those service standards? And we're going to assume that when you're asking yourself that question, that your organization is currently meeting the service standard prior to the CAT event. Moving on to another weakness we see, loss exposure. How many policies do we anticipate will be affected by this event? Based on those anticipated policies affected, what is the estimated financial impact? And then How does this loss exposure correlate with our current capacity and anticipated surge in claims? Response time. Did we have the opportunity to notify the affected policyholders ahead of time and provide them some peace of mind by sharing best practices when responding to the CAT event? Well, what's the basis for this question? Most carriers have policy contact information on file. We know this because they share policy changes, claims process, and even best practices on new and renewal business. So I ask you, could this be shared again prior to the CAT event? Have you partnered with any stakeholders to address your capacity and service standards? And then after you've partnered with those stakeholders, have you clearly identified the role and responsibilities of each stakeholder in the CAT response? Settlement strategy. What is your current settlement strategy? And if you continue this settlement strategy during a CAT event, what is the potential impact to your business and stakeholders? Moreover, if we change the settlement philosophy during a CAT event, what's the potential impact to our business and stakeholders? Or maybe you're going to get creative and you're going to say to yourself, hey, can we create a settlement strategy that modifies our current model and limits potential impacts to the business and stakeholders? Thinking about these things, let's move on to another weakness we see: communication alignment. Is our claims team aware of our mobilization procedures for a sudden, considerable surge in claims? Are stakeholders aware of our CAT response? And then lastly, do we have internal and external communication channels if our CAT response needs to change abruptly? Did we consider alternative solutions due to unforeseen circumstances when we developed our CAT plan? Supply chain awareness. Who and what is most likely going to be affected by the CAT event? And we're very specific when we say who and what, because who and what could be building materials, it can be contractors, but it could also be experts such as engineers that may be necessary. So you should start to think to yourself, if I'm aware of who and what, is there anything unique going on in the market related to who and what is most likely affected? And have we considered how the availability of who and what may affect our overall claim costs? How about supply chain awareness and our settlement strategy? How about, again, the partners that we engage? So as an organization, I'm challenging you to start acknowledging these weaknesses, or begin to think, do I have these weaknesses within my organization? Because they should trigger critical questions, much like the ones that I presented to you today, so that you can ask yourself as a part of developing that CAT plan. So again, today, that key question is, do we have a current, documented, and communicated CAT response plan? Let's talk about what that looks like. Well, first, a CAT plan should not be theoretical or outdated. That means it should have an objective goal and measurables. These goals and measurables should be related to company mission statement, company values, staff proficiency, your current performance, and even more importantly, your desired performance. And that desired performance can be anything from file pending per adjuster, cycle time, or the handling procedures to settlement strategy. This CAT plan must reflect your current internal capacity, vendor capacity, geography, and anticipated claim volumes. Again, I touched on this earlier because these are several key weaknesses that we've experienced when a CAT event hits. That CAT plan must also be reviewed and refreshed regularly, not during an active event. Well, here's why I'm telling you it should be reviewed and refreshed regularly. Because if you are reviewing and refreshing during an active event, you are being reactive. Let's talk about reactive. Well, reactivity responds. It does not plan. Therefore, reactive mode will not only leave you unprepared, but also unable to identify areas of improvement or efficiency as your organization continues business operations. This inability to identify those areas of improvement and build efficiency could ultimately lead to your demise, be that market share, pricing, or worst case scenario, operations. Remember, a reactive mentality is constant change, and goals can never be achieved because your priorities are never diagnosed. Finally, the CAT plan should identify stakeholders and their role in the response. Well, what do I mean identifying stakeholders and their role? Well, when you have a plan, the players should know their part. And when the players know their part, accountability can be implemented. Accountability provokes action, which means the players can explore solutions when they encounter any roadblocks. That's why adopting the plan and identifying the partners and their role means your stakeholders are operating with you as a team. And when this happens, the goals and measurables that you set forth have a means by which they can be achieved. So, you might be listening, you're like, Ed, that's a mouthful. Honestly, you have said a whole lot. Okay? My organization, we don't have a CAT plan. We're thinking about one because you told me I should start thinking about. So again, help me out because you said a lot. What are you saying we should consider? Well, I want you to know a CAT plan should clearly address staffing and surge capacity, vendor and adjusting partner engagement, settlement philosophy, communication protocols, authority levels, and escalation paths. Crawford, we regularly encounter insurers who are unaware of internal capacity issues and don't actively address those capacity concerns until a CAT event is reported. This is why identifying internal capacity should occur quarterly. And you should have regularly scheduled meetings with restoration contractors and adjusters so that you can understand the outsourcing capacity because it's essential to avoid service issues when that CAT occurs. When developing your CAT plan, take the time to consider, who are we? What is our brand? How do we transform our brand into action? And what stakeholders do we believe can best deliver on our brand? Lastly, because we have a brand and we want to reinforce that brand with our clients or customers or insureds, what CAT measurables can we put in place to track our brand execution? Once you've answered those questions, you should also build in a CAT debrief with your stakeholders. CAT debrief. What is a CAT debrief? Well, quite simply, it's a formal meeting with stakeholders when the CAT event is significantly complete to identify things that went well, identify gaps, and areas of improvement. And the reason why you want to have this CAT debrief, the value of this debrief, and we've seen it here at Crawford because we do it with our carrier partners, is because it asks and answers that fundamental competency of why you created the plan in the first place. Did our CAT plan work? So again, I've shared with you how a CAT plan should be developed And what you should take into consideration, questions your organization should ask yourself, how you should frame it. So let's look at the risk of not having a CAT plan or waiting too long to develop one. So speaking with us, a reoccurring issue that we see is that insurers wait until a CAT occurs to assess capacity. And at that time, their assessment reveals the need for assistance. Unfortunately, at this point, they begin to reach out to adjusting partners because they want to know, can we identify any regional impacts? Can we start securing some resources? Can we look at file assignments? And now maybe even depending on the policies that you have, do I need any specialization? In other words, based on the team, is there a gap with experience in a specific level of claim handling? But here's the problem, because you've waited until that CAT happens. Adjuster capacity is already constrained, and that includes your adjusting partners. Contractors and trades are already stretched. Why? Because they are already working for multiple insurers during the event. So both adjuster capacity and contractors and trades being stretched means that you are now competing with other insurers to access the same limited resources. So with these factors in mind, where does that leave your business? The takeaway we're trying to draw home to you today is that capacity planning during a CAT event is already too late. You got to do it before the event happens. Again, I'm saying a lot. Maybe I'm getting the brain moving. Maybe things are starting to turn. And so I'm hoping by now you're starting to think to yourself, Ed, you're saying some good things, some things that I haven't thought about. But what can I do to jumpstart my planning? Well, the first step you can take is proactive partner engagement. An effective CAT response requires pre-event discussions with independent adjusting firms and restoration contractors so that you can get a clear understanding of your regional exposure, your surge capability, any licensing and mobility constraints, and to help identify your preferred response model. By engaging with adjusting partners, that can help you identify high-risk regions. It can help you forecast potential resource gaps, and it can also help recommend realistic response timelines. The beauty of this coordination before the event happens is that when this collaboration occurs, ahead and not during landfall or post-event, your organization is going to be better equipped to manage capacity because the resources are in place to take action. So, yes, I'm engaged. I'm ready to have a CAT plan. I'm starting to develop one. I've heard what you said. I've engaged some partners. I've moved on. I've determined even what my CAT settlement philosophy is. So you've put the plan in place, but I'm going to challenge you again and ask, during your planning session, did you outline the benefits and risks of your settlement plan? And the reason why I mention this is because another common challenge that insurers face is that they may decide during the CAT to shift their settlement philosophy, often towards the cash out settlement. Who doesn't love the cash out settlement? We love it. Why? Because it can reduce cycle time, it can decrease adjuster touch points, and it can improve those short-term closure metrics. The problem that we've experienced when insurers switch mid-CAT to the cash out settlement is that it creates confusion. Planning and communicating the settlement philosophies in advance of a CAT is important so that that confusion doesn't occur. What do you mean? What do you mean confusion? Well, let me give you an example. Knowing there are building materials on back order supply chain, or material long delays in completing roof repairs for a hail event supply chain, That might guide your organization to that cash settlement strategy because you've recognized that, listen, I know I have these supply chain constraints. I'm going to create this estimate and I'm going to cash people out. We know this indemnity model is going to close claim faster and reduce that cycle time. However, sometimes those hail claims or material shortage claims may likely reopen due to uncalculated inflation. So those previously issued payments now are going to fall short of your settlement, and now you're going to have additional unanticipated costs. Listen, I'm saying that, but I'm not telling you that because there are supply chain constraints that you should opt out of that cash settlement. That's not what I'm saying, because your settlement philosophy still needs to align with your brand, your company mission statement, your company values, and your desired goals and measurables. However, there's a real reason why I mention this, particularly to supply chain constraints and changing that philosophy mid-event, is because you want to make sure that you're considering both the pros and the cons of your settlement strategy. Oftentimes, as humans, we always think about the benefits of something and we tout the benefits. Our commercials always tell us the benefits. We watch the, prescription or drug companies always do it best. They tell us everything that their drug does great. And in the small print or in the really fast micro machine words, they tell us all the negative features that could happen to individuals that have happened on their case studies. I bring that up intentionally because the idea is when you're doing that or developing the settlement strategy or trying to maintain your settlement strategy that still fits your brand, company mission, company values, you need to consider not just the pros, but also the cons so that you can be prepared to address those cons quickly and efficiently. And that's why determining and communicating claim settlement philosophies on specific perils in advance is going to help your organization, including adjusters and contractors, to move claims expeditiously. It's because it allows them to execute tasks efficiently and set clear expectations with policyholders. So I want to dig a little deeper into that changing philosophy and how it creates risk when you do it abruptly or during the CAT event. So here's what happens when you change settlement philosophies without advanced communication. First, your adjusters are getting conflicting direction because maybe those communication channels weren't there that were necessary to provide them the most up-to-date information. Your contractor as well are now going to be unsure how or even if they will be engaged, which means then if your adjusters and contractors who have their feet on the ground acting directly with insureds, now your insureds are going to be unclear on next steps. So what's going to be a result of that? You're now going to get inconsistent claim outcomes. You're going to have unnecessary time to adjust claims and appraise the damages. And both inconsistent claims outcomes and unnecessary time to adjust claims due to confusion in your plan or change in settlement philosophy, and your clients, insureds, customers, members not knowing what that claim process is going to be, all of those factors are going to erode trust. So this is why that settlement philosophy needs to be decided, documented, and communicated before the CAT and not during one. And this is why communication is critical, because while shifting toward that cash out or alternative settlement model during a CAT event may be discouraged based on what I'm telling you today, let's be honest, sometimes it can't be avoided. But when communication is open, the channels are set, and it's clear, then your adjusters know, your contractors and restoration partners know, and more importantly, when they know, they can share that with policyholders. And that communication should address when the cash out is going to be appropriate. It should address what the insured is going to be responsible for post payment. And probably the most important thing that communication should have is what support remains available to your insured if issues arise. If you do these things with that communication, your proactive communication is going to reduce friction and help accelerate resolutions. So part of your CAT plan should always involve communication strategies for all scenarios. It means I got to have a backup plan from a backup plan. I need to think about what are the barriers or what are some of the concerns or some of the issues that I may likely encounter and what can be a possible solution so that I can share these various solutions with the stakeholders who have their boots on the ground. So let's get into some real world issues when choosing that cash out during a CAT. So again, we're not knocking the cash out because we know that the cash out can be effective. But we're talking about what we consistently see from our carriers and our partners during CAT events. Three main things that typically happen: contractor availability, supply chain constraints, which we touched on, and inadequate initial payments. When we're talking about contractor availability, that means your insureds are often struggling to find contractors willing and able to do the work. Most specifically, because we're using restoration vendors, they're going to be hesitant to not only take on work in a high demand environment, but they're also going to be hesitant to commit to those realistic timelines. Because they're hesitant, that's now going to result in delayed repairs, temporary or even incomplete mitigation. And that temporary or incomplete mitigation has now or will or may result in additional or secondary damage. And anyone who works claims or has history in claims knows that they have seen these situations. They certainly happen. We touched on supply chain constraints, but we're going to go into deeper because we do know that these CAT events amplify existing supply chain issues for, again, material shortages, transportation delays, or even limited regional inventory, because we're thinking about that geographic area of where this CAT hits. You take those three supply chain constraints and you further add the challenges that we are experiencing today, such as tariffs and inflation, and now you're going to get a rapid price escalation during CAT. That supply chain constraint and that hesitant contractor or restoration vendor means you're going to have what? Inadequate initial cash out payments. So those cash out amounts that appeared sufficient at settlement are now going to possibly fall short once repairs are underway because they failed to account for those real-time price increases. Because repairs are short and those real-time price increases weren't accounted for, you're going to have what? Reopen claims, increase repair costs, and guess what? Because those claims reopened, and they now have an increased repair costs, all of that cycle time reduction that you had is offset. So if I'm lucky by now, you're listening to me talk, I'm saying a lot. Hopefully I'm getting you to think, because I keep reiterating that. I want you to be thinking about where you sit now and what you could be doing. I'm also hoping you're asking yourself, well, Ed, I've had these experiences, I've had these cash outs, but why would a claim reopen? And even if the claim reopens, is that really a cost to my business? Well, I'm going to again tell you what we see here at Crawford when working with carriers. So, like I touched on earlier, files reopen due to inadequate cash out settlements. contractor unavailability, and those supply chain disruptions. We've learned that those three factors cost more than if they were managed traditionally, and they create additional customer frustration. And if they create additional customer frustration, then you know that those satisfaction metrics that you have in place, be it NPS or some other measurement, are now going to be affected. So what was at the time of your CAP plan and settlement philosophy a short-term efficiency decision, it's now become a longer-term cost driver. So thanks. Thanks again, Ed. You shared so much. You provided a good detail of information. You're trying to get me to think. You're trying to get me to be concerned. But I'm asking you, Ed, please tell me, what are some best practices for an effective CAT response? I want to know. All right. Well, here are some best practices. The first thing is maintain a current CAT plan. And that CAT plan should be reviewed annually. The second thing you should do is engage adjusting partners before CAT season. And define your settlement philosophy in advance, taking into consideration some of the scenarios that are presented and some of the pros and cons. You should also communicate clearly and consistently to all stakeholders so they know their role in your CAT response. Think. This is all great, but at the same time, you're thinking about speed, you're thinking about pace. Balance speed with realism. Cycle time matters, it's important, but also consider that durability of your resolution. And then lastly, conduct a CAT debrief. That means debrief with internal staff and your partners at the conclusion of each CAT. And use that debrief at the start of your next CAT planning cycle, because the information noted in your debrief should identify areas of improvement to be implemented in your next CAT plan. So to bring this to a close, CAT success, it's not about how fast you react, because I told you what reaction looks like. It is about how well you prepare. Proactive planning, aligned settlement strategy, and clear communication are the foundations of an effective CAT response. When insurers, adjusters, contractors, adjusting partners, and insureds are aligned before the event, your outcomes improve for everyone. So with that being said, I'm going to ask you the same question that I asked you at the very beginning of this presentation. What is your current CAT plan?
Thanks, Ed. That was all
yeah,
fantastic information. I think you gave everybody a lot to think about. We've got some time left here. If anybody's got questions, again, you can put them in the Q&A and we'll take a look. While we're waiting for people to put some in there, I think I'll just quickly share real life example. We'll wrap up what Ed's saying and kind of put it into context. And I'll use an example of the CATs that hit in 2024. 2024, CAT was declared. An insurer approached us, advised that they required adjusters to attend sites, prepare control scopes, document the loss, receive and review against formal scopes and estimates that were going to be prepared by their own vendor network. Approximately 3 weeks into that CAT, the insurer came back and advised us that their vendor network was now too busy. They were handling all of the water mitigation. There's going to be delays by many weeks in preparing the scope and estimates. And as a result of that, their vendor network had reached capacity. They needed some time to catch up on the estimates. They couldn't take any new assignments. So now you've got homeowners. They were required to try to find their own restoration contractors for mitigation. These weren't preferred contractors. They weren't in the network. That started causing delays. It also required extra direction from the adjusters, as well as additional time and effort to obtain the required supporting documentation. That led to some frustration with the homeowners. Uh, we were able to ask, we were asked then to assist partway through the claim by moving extra resources into a desk model. So again, being reactive, trying to figure out a way midway through 3 and 4 weeks into a CAT, what resources are there? How do we move them around to deal with this? Okay, so set up a desk model. You've got desk adjusters who start taking claims. Field adjusters are deployed. They start creating full scopes and estimates. That helped alleviate the backlog from the contractors, let the contractors focus on the mitigation work. It allowed us to get those estimates and provide some settlement options to the insureds much sooner than they were going to be done. At the end of it, we did a debrief, determined that cycle times increased across the majority of claims, customer complaints increased, reopened files increased, and the contractor repair start timelines were projected to be months out because they were overwhelmed. On the flip side of that, same CAT 2024, an insurer that had previously approached us to discuss options for when a CAT could potentially have increased claim volume that would exceed their adjuster and vendor capacity, what could be done. So in advance, set a CAT plan for that scenario using a dedicated desk team that would be licensed across Canada, being familiar with their claims handling process, and therefore a small number of business as usual property claims would come through month by month over the years so that that desk team would be familiar with handling their claims from start to finish. And then they could determine if there was a need to deploy dedicated field adjusters solely to write estimates if this scenario occurred. So it improved speed and quality, allowed their vendors to focus on the mitigation services. And we also pre-planned for a scenario when field adjuster capacity thresholds exceeded. There was a backup plan to have junior adjusters attend the sites, collect the loss information, submit the details to contractor connection estimate review team. That team was able to create accurate scope and estimates from the documentation provided by those junior field adjusters, and then issue settlements. And as a result of that, the insurer had previously set a settlement philosophy based on these different claim scenarios. So if volume allowed restoration contractors to complete mitigation and complete the repair scope and estimates in a timely fashion, those preferred vendors were asked to proceed with the final repair work, and that was the communication given to the insureds that at a time of a CAT, they'll be there to kind of hold your hand and guide you through from start to finish. But if CAT volume was expected to exceed that vendor threshold, that was predetermined with CAT planning with their vendor network, as well as their internal adjusters, independent adjusters, and that would switch over to a cash out as a preferred method based on the adjuster or the contract connection estimates. So when we did the debrief on that side, it was found that the preset KPIs or cycle times for claim closures, they were met, decreased the customer complaints because there was clear communication at the outset. Timelines were set, workflows and settlement cash out options were communicated, and the restoration contractors were able to provide service to the clients as they focused on the mitigation and the customer service. There was less friction from large number of estimates or jobs on kind of a backlog. So that's just a bit of a real life scenario that we saw, especially in 2024. And the factor that was the game changer, had they engaged with their partners and vendors prior to the CAT, and that was usually done on a quarterly basis just to make sure that things had changed, internal capacity hadn't changed, vendor network hadn't changed, and to keep that plan up to date. So a bit of a real life scenario on what we see, and it kind of brings into account all of the things that Ed had brought up there. Got a question here from Anna. Do we use any AI tools for cat season? Anna, great question, and I think AI is at the top of everyone's mind, and every time that there is a conference, that seems to be at the front of it. We are seeing that artificial intelligence and other technologies are being used, especially for claim intake, generating communications out to policyholders. They are helping us set up claims much faster as well, taking the manual process out, which is especially helpful when we have increased claim frequency and that intake comes in quite quickly. The automation is really helping. We're using it with some of our tools and helping us create um, scope, sketches, measurements. That's where we're also seeing a lot of the benefit for our field adjusters, uh, not necessarily having to pull out their tape in 2 feet of water anymore, using some of these tools to create scope and estimates and generate ESX files so we can quickly get estimates done within tools like Xactimate.
Yeah, thanks, Billy. That I was, 1000% going to say it. The use of our AI tools will specifically be um, those mundane tasks that can be done quicker and faster. So, boots on the ground individuals being able to use technology that we are currently working with today that can speed up that process of the scope of work and measurements.
And so we'll just give it another minute here and see if any other questions come through. Okay, so if there's no further questions, we'll wrap it up, give everybody back a few minutes on their lunch hour, but really appreciate your time. And just to let you know that this session will be put on our YouTube channel and information will be sent out to everybody who attended. So thank you very much for taking the time today. Ed, thank you for the presentation and all of the
Yeah,
information.
yeah.
Have a
Thank you
great
all
day,
very
everyone.
much.